Singapore's core inflation remains unchanged at 5.5% in February. But even as the pace of price increases appears to have peaked, economists are saying that the cost of living will remain high. Core inflation, which excludes accommodation and private transport, is still the highest since November 2008, with increases in electricity and gas among the key drivers. Rebecca Mateo with a report.
Food inflation has been accelerating in Singapore for months now. It's now holding steady after surging to 8.1% in January, a smaller increase in prices of prepared meals offsetting the steeper rise in non-cooked food prices.
The previous increases in raw food prices brought about an increase at this stage in the prices of cooked food, including the restaurants' food inflation. So I think going forward, moderating international food prices will continue. I think they will help to at least stabilize the prices going forward.
But households are still grappling with surging energy prices as electricity and gas inflation jumped to over 12%. Heading to the shops for some retail therapy is also even more expensive as prices of personal care products and recreational goods rise even faster. Still, smaller increases in car prices and lower petrol prices have slowed private transport inflation. One analyst also points out that global commodities and oil pressures are showing signs of easing. She says this means Singapore's inflationary pressures are mainly domestic.
We will likely see the impact of the GST hike for a few more months. And also we do have some wage increases as well. Starting 1st of March, the progressive wage model was expanded to cover large sectors like food services as well as waste management. So that could actually continue to show a pickup in some of the services inflation for Singapore as well.
With the US Central Bank hiking interest rates by another 0.25 percentage point this week, economists expect Singapore's interest rates to also rise in tandem.
So rising short-term interest rates, which result in higher borrowing costs, higher mortgage rates, may also dampen consumer spending as well as investment. So that in turn could result in slower inflation.
Singapore's headline inflation has cooled to 6.3% in February, driven mainly by lower private transport inflation. Projections for the year remains unchanged, with core inflation expected to stay above 5% for the first quarter of 2023, before slowing down in the second half of the year.